Hey, good morning, Daniel. Good morning, Jim. Good morning, everybody. Couple minutes early, but it is, what is today? Today's Wednesday, the 21st day of December. Man, 4 days left until Christmas. Pretty exciting. Hope everybody's doing well today. I'll give it a minute to let some people get in here. Um, Looking at the names, nice to see you guys here. Hopefully we get some new folks in. Good morning, Alex. I know a lot of you are getting ready to do your Christmassy stuff, taking days off. Cousin Eddie's coming in from out of town, parking the RV out front. Going to be a great day today, though. Gotta love Cousin Eddie. Nothing worse than realizing that you are your family's Cousin Eddie. That's my wife's favorite movie ever, I think. Guys, it is 9 a.m., which means that class is officially going, but it doesn't mean that we can't partake in some shenanigans. Small group here, recognize all the names in here. It's nice to see you guys. Hope everybody's gearing up for the holidays. If nothing else, taking a little time, hang out with family. We're going to talk about rules today. Guys, it is pre-holiday trading. It tends to be a little slower. If you wait for the best of the best, what we do still works in a slower market. It just means you need to be a little more patient. Alyssa, just before I get distracted, beautiful trade this morning. Really well done. It's nice watching you guys put it all together. It's a lot of fun when you guys post your charts and talk about what you're doing and tell me how you got to where you are. And I don't think you could have done that one any better, Alyssa. So beautiful trade. My only complaint is that I wasn't in front of my computer to catch it myself. So good job. If you scrolled through and you looked at Alyssa's picture, guys, I'm going to show it off. We're celebrating victories today. Alyssa took the absolute perfect trend trades. Yeah, they do. They definitely do. Alyssa had the advantage of momentum and the advantage of absolutely nothing in her way. And she had the advantage of being able to pinpoint the area where the market is likely to continue. And then because she has these indicators, she knew where she was getting in and she knew where she wanted to get out. And I'm telling you, what a beautiful way to start the day. Just feels good when you get one of those under your belt right from the beginning. If you're wondering how Alyssa did what she did, guess what, guys? We're going to talk about it. We're going to talk about everything that she saw and why she took the trade that she took. And we're going to do that over the next hour. We're going to watch the live indicators, talk a lot about what's going on. And I'm going to do my best. Oh, you stop. I just throw it out there. I sold you the elliptical, Alyssa. You're the one learning how to use it, though. But I appreciate that. That like a little ego boost in the morning. Guys, forexfactory.com. This is my first stop every morning. I want to make sure that I'm not jumping in front of news. There's three types of news that show up on forexfactory.com. There's low impact, the yellow boxes. We had a little bit of that at 8:30 a.m. today. There's medium impact. No medium impact until tomorrow. Medium impact has the potential to make that market jump and go crazy. I try not to take a trade right before medium impact. You'll have to make a decision on how you feel about that. And then there's high impact, these red boxes. High impact for me, that red box is a red flag. It says, go refill your coffee. Take a minute. Odds are favorable that somebody's going to make that market spike one way or the other. And if they do, you don't want to be in front of it. So at 10 a.m. today, guys, put a note on a piece of paper, set a timer for Siri. Be right about the time we take our first break. There is the CB Consumer Confidence. And I always remind people, I really don't care what the news is. Doesn't matter to me what they say, what the results are, whether it's positive, whether it's negative. The only thing I'm concerned about is knowing when some guy with a $10 million account might dump half of it into the market or take half of his position off to make things go crazy. So watch news every day. Make sure that you know where it's at, when it's happening, just to keep you from jumping in front of a train. And then everything that I talk about, I mean everything, guys, right here from the education page. 2 sections, software user guide. If you have NinjaTrader questions, whether it is adding stops and targets, scaling charts, setting up a new connection, building new charts, applying templates, rolling contracts, everything's in the software user guide. Guys, this is really going to fix 99% of your problems. If you don't find what you're looking for in there, make sure that you raise your hand in class. And then I'm going to go to the Contact Us page. Don't forget, Jason Sager is absolutely amazing. There's nothing he can't fix unless it's not broken. That's the only thing that he can't fix. But if you need to reach out to somebody with Nexgen, there we are. Tech questions, get a hold of Jason. Education questions, get a hold of me. Sales questions, grab your salesperson. And then if you just want to rant and rave a little bit, not really. If you want to rave, John Novak's pretty accessible. Don't be shy. He will be happy to talk to you. Then we go back to the education page and we have the tutorial section. This is where all the great information comes from. This is where we talk about rules, entries, management. If you are interested in large chart swing trading, maybe you're interested in trading crypto, anything and everything that you can do with this software, you're really going to find here. The patterns that we talk about in class work on any market, they work on any time frame. But we teach class on a smaller, faster setup so that we can get more examples for you to learn from. And when we talk about class, there's a section that says first 30 days and beyond. And I still don't know why it's all the way down here. Keep yourself focused on one simple trade. Morning, Gary. One simple trade, guys. If you commit to 30 days of focusing on the high probability trend trade, it's gonna yield amazing results, because if you focus on for 30 days, if you're brand new, let's talk about this. If you're on a demo, if you're in your first 30 days, and guys, this is the most important one. If you're coming back to Nexgen after a break, want to look for consistency, you qualify for this 30 days. I've talked to a lot of traders that have spent a lot of time with our software, and they typically bypass the foundation because they want to catch everything. And it rarely works. They don't want to post in class because they know better. They don't want to use a spreadsheet because it feels like work. They don't want to annotate their charts because really, who has time to do that? Guys, there's a very simple path to get you to where you want to be. And it revolves around, I'm going to say 3 things. The first thing is posting your trades in class. Every time you take a trade, and guys, especially the trades that don't work out the way you want them to, post those in class with the reasons that you got in. Talk about, let's see if I have that picture. Write your rules on your chart. Talk about what you saw that made you comfortable to get into that trade. Talk about where you entered. Talk about where you got out, why you got out. Give me all this information. If you are confident or nervous, anxious, unsure, put that on your chart. And what's going to happen is you and I are going to have an amazing conversation about everything that I see. We're going to talk about all the great stuff that you did. And then we're going to talk about the things that maybe you could have done better. Maybe something that you missed on your read. You'll find that I'm typically pretty warm and fuzzy. I try to create a little confidence. I love to celebrate the little victories. So get those charts to me. The next thing is tracking your trades and your real-time performance in the spreadsheet. Again, when you come to just above that one, there's a trade tracking sheet. This is made available for everybody. And this is going to be a great key for your consistency, is coming in and using this sheet every time you take a trade. Every time you take a trade, it's going to go on this first page. You're going to track what you did, what you saw, why you did it. And when you do that, you're going to begin to recognize two things. You're going to recognize patterns that are making you successful, and then you're going to recognize patterns in yourself that might be holding you back. And one of the things that I tend to be good at is recognizing patterns in you. If you post every trade that you take, I may be able to identify, well, you're trading in determination conditions, or you're jumping in too soon. Maybe you're getting out too late. Maybe you didn't notice something that was off on another chart because you were so hyper-focused on the chart you're looking at. We're going to be able to recognize those patterns, and then we're going to be able to work together to fix whatever may be holding you back. The next thing on that trade tracking sheet is going to be your personal favorite looks. The things that give you confidence, the things that help you win, the things that fit your rules and your plan. You're going to fill up the spreadsheet. You're going to work on creating a picture library of all of your best of the best looks. You're going to begin working on a way to manage it. You're going to begin to recognize patterns, maybe multiple divergences and where they push the market to. Termination conditions, market flow. All of this is for you to fill up. This is your confidence page. This is your I love everything about what I'm seeing, or here's things that keep me from being successful, so that you can come in and study it. And then there's the client trade examples, guys. On this page, there are 69 pictures of high probability trend trades. If you come to my sheet, my spreadsheet, we're pushing 80 at this point. Every time you guys post a beautiful high probability trend trade, like Alyssa did, I'm not proud of it, but I'm going to steal it. So when the rules are met beautifully, I'm going to put these into my spreadsheet. I'll give you guys credit. But now I've got something to go back and study. And this is exactly what you're going to do. You're going to take a lot of pictures. You're going to present them in class. When you present them in class, it's going to be an annotated chart. Put it in the spreadsheet. And that's going to be your path to success. Your path starts on the high probability trend trade. And that high probability trend trade is going to teach you to read your charts. Because 90% of what we do is chart reading. 90% of what we do is simply looking at our indicators and determining whether or not our rules are met. And the rules being met provide advantages, and those advantages are what get us into a trade, but it all stems from chart reading. 90% of the time, you're going to be reading indicators. 10% of the time, you're going to be taking those advantages and entering the market. And your chart reading mastery incorporates 3 essential elements, and this is what your first 30-day provides. You're going to be able to look at the market and understand where it's likely to continue. And you're going to be able to use that continuation spot for an entry for a high probability trend trade. You are going to understand where the market is likely to go. This is going to help you make great choices on targets. And you're going to understand where the market is likely to stop. And this is what we call a termination condition. And these areas where the market is likely to stop can end a trend, can reverse the market, may create a bounce that's too large for you to stay in a trade. And these 3 items, where the market is likely to continue, where it's likely to go, where it's likely to stop, are going to bring you to these 3 rules for the high probability trend trade. And this is what our first 30-45 minutes revolves around, focusing on this one trade that provides 3 very distinct advantages to get you into the market. And those 3 advantages, those 3 rules happen on 2 charts. I made a brand new chart for you guys. We updated the old one, always moving forward. When you start reading your indicators, you're looking at your charts, you're going to start on your 13-2 chart. And your 13-2 chart is like a broad stroke of a brush. You're going to get the general temperature of the market. You're going to use the most current bar. You can see where these arrows are, the first bar, the most current bar. and you're going to be able to determine the trend of the market. If the background is green, we're in an uptrend. We're only looking for rules to be met for high probability trend trades long. If the background is red, we're in a downtrend. We're only looking for rules to be met for high probability trend trade short. Also on the 13.2, you're going to gauge the overall momentum of the market. This is rule number one. And rule number one is just going to let you know that you have strong triggers. It's your first advantage that you're going to have. Rule number two is also going to be met on the 13.2. Rule number two is going to make sure that you're not trading into termination conditions, those areas where the market is likely to stop. And both of these rules have to be met on a 13.2 before you turn your attention to the 5.1. The 5.1 is your entry chart, and this is where you're going to refine that broad stroke of a brush that's provided by the 13.2. You're going to be able to pinpoint your area for entry where the market is likely to continue. And this is where rule number three takes place. You're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. By doing so, it's going to allow you to reduce risk and maximize your profit potential. So we have three rules and where they happen on only two charts. And then I'm going to share this picture in the room as well. These are your three rules. Pretty simple. Rule number one says you have to have strong triggers. Rule number two says no termination conditions. And rule number three says that you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. We're going to break each of these rules down here in the next 20 minutes. We're going to identify what they mean, define them not only in words but also in pictures so you can get a visual of exactly what you're looking for. I've also put on this the advantages that each rule gives you. And I think that this is a key part to beginning to trust the rules, to trust the methodology. Rule number one, those strong triggers give you the advantage of momentum. It gives you the advantage of a market that's moving at a great pace in the direction of the trend. Rule number two, by not trading in termination conditions, it gives you the advantage of a clear path, nothing in the way. And then finally, by using a limit order to buy or sell the pullback at an area inside of favorable large triggers, gives you the advantage of an entry where the market is likely to continue. So when you focus on the advantages given by your rules, the flip side of that is you can focus on the advantages that you're giving away by not following your rules. And I think that when you begin to think about it like that, well, I gave away my advantage of momentum. I gave away my advantage of a clear path. It puts that accountability on you to making good decisions to follow the rules. So we're going to look at these two charts, we're going to look at these three rules, and we're going to talk about a high probability trend trade. This is the trade that when properly executed typically wins 70 to 80% of the time. And it all starts with strong triggers. In an uptrend, when your background is green, strong triggers means that your small triggers are up, they're above the large triggers. Your large triggers are widening, the small triggers are above. It equals odds favorable for the market to continue up. Those strong trigger lines give you the advantage of odds favorable momentum, and you're going to hear me say that a lot in class. In a downtrend, when my background is red, smalls break away from the large are wide, they're angled in the direction of the trend. It's the space created between the small and the large that let me know that the odds are favorable for the market to continue down. Once again, this is the advantage rule number one gives me. When those small triggers break into the large triggers, they weaken the large triggers, I'm giving away the advantage of momentum and I'm exchanging it with the trigger look that lets me know that anything can happen up or down. So for your first 30 days, going to focus on that best of the best. We're going to look for odds favorable momentum, that point where the smalls break away until they return. This is where we're going to look for opportunities. You'll notice these circles. These are potential entries on the 5-1. This is going to be a study tool for you. When you have odds favorable momentum on the 13-2, and you see these tails, these wicks, you're going to circle them. And this is going to help you study a little bit. You see it in a downtrend as well. From that point where they accelerate away until they return, if you see these tails or wicks, put a circle on it. They're potential entries, and it's going to help you tie together everything that you see. So here is crude oil 13.2. Looks like some indecision in here. But here I have small triggers below the large triggers. The large triggers are wide. They're angled in the direction of the trend. So I circle a tail. If you start doing this each and every morning, and guys, this is only a 13.2, or at the end of the day, go back and circle these tails, look for the opportunities. You're going to realize a few things. The first thing you're going to realize is that the market's going to give you opportunities if you're patient. These don't happen all the time. Sometimes you'll wait 20 minutes. Sometimes you'll wait 3 hours. It just depends on the day and the volume and what's going on. It's going to teach you to recognize that best of the best look. Guys, you with me on this one? Give me a Y in the room if you're with me. This is simply the advantage of odds favorable momentum. Guys, this is the key to getting to that next area. Once you have odds favorable momentum, rule number 2 says don't trade into termination conditions. Once we have the advantage of odds favorable, we're going to make sure that we couple it with the advantage of a clear path. We're not going to trade into a termination condition. And a termination condition defined, it's simply a Fibonacci-based indicator that has the potential to stop the market. It may reverse the market, that area likely to stop. These areas can be blue Fibonacci support. It can be yellow 1-to-1 dots, red Fibonacci resistance. It could be a cyan divergence low line or a magenta divergence high line. It can be a large chart midband if the large triggers are a full bar away, or any third divergence in the same area. So when we talk about defining a termination condition, 2 things happen. The first thing is that price reaches an area, meaning the price bars trade down, reach that blue Fibonacci support. When price reaches an area, your job is to ask yourself, where are the trigger lines? Well, if they all remain above support, rule number 2 is not met. You've reached an area that may reverse the market, that's likely to stop the market. No more short trades because rule number 2 isn't met. You see the same thing up top here, right behind this little call out box. Price reaches support, and absolutely none of the trigger lines break through. This is a termination condition. It may reverse the market, but guys, remember, if every fib held, the market would just be rattling in between 2 fibs. So we consider this area broken when both the small and the large break through. You can see that support begins to act as resistance, and now we have the advantage of the clear path again. Just to kind of reiterate, price reaches resistance. Where are the triggers? It depends, Alyssa. As a general rule of thumb, if you want to say if a termination condition is present, I'll exit the trade. That's probably not a bad idea. When we get to the 3 divergences, I'll run through an example for you, and hopefully it'll help a little bit. And that's coming up soon. But let's talk about this first and make sure that everybody's good. Price reaches resistance. None of the trigger lines go through. Rule number 2 not met. There is no advantage of a clear path. Pulls all the way back down to support, right to that mid-band. None of the trigger lines have broken through. This is an area likely to stop the market as well. 90% of what we do is reading our indicators. Guys, an important thing to notice on this. Price reaches the mid-band. We're a couple ticks off, but for this lesson, we're good. The large triggers don't follow, and they remain a full bar away. There's room for this entire reversal bar before they smack into those large triggers. This is the look. Let me scroll up. When the large chart mid-band acts as a termination condition. When those large triggers don't join the party, whether it reaches a mid-band, Fibonacci support, when they accelerate away from the large trigger lines don't follow. More often than not, price returns to those large trigger lines. So termination conditions both directions. Those price bars come back up to resistance. Trigger lines remain below. Resistance is a termination condition. They come up to this magenta high, this divergence line. Trigger lines remain below. It's a termination condition. Then they reach this second area of resistance. And guys, you'll see this a lot in the market. When there's two Fibonacci areas very close to one another, price loves to make it to that second area. All the trigger lines remain below. This is a termination condition that creates a full reversal. This full reversal gives me odds favorable momentum. Guys, this is how we define a strong top or bottom. I'm going to type it in the room. Is going to be a termination condition that gives a full reversal, meaning that the large triggers go from green to red or red to green, and gives us odds favorable momentum. So that's a strong top or bottom. This would be considered a strong top. Termination condition gives me a full reversal, provides me odds favorable momentum. Here's a strong bottom. Price reaches 1-to-1s. Trigger lines remain above. This is my termination condition. No more short trades. The termination condition creates a full reversal. My large triggers go from red to green, and then provides me odds favorable momentum. This is a strong bottom. This is my best chance of success in the beginning. A high probability trend trade that happens after a 13-2 termination is your best chance of success. Sometimes you'll get a pivot that provides you odds favorable momentum after a market reversal. This is still an outstanding trade, but this is my best chance of success. When that market turns from seemingly the middle of nowhere on the 13-2, this next termination condition is going to help you identify that change happening on a smaller, faster chart. And there's two ways you're going to use this one. The first way is you're going to be able to recognize that change because three divergence in the same price range may terminate the trend. It becomes more powerful when the small trigger lines are inside of the large. We go from anything or odds favorable to anything can happen. It becomes even more powerful when that third divergence is higher than the second from a low or lower than the second from a high. This is a head and shoulders patterns. It becomes very powerful. So you'll see this or this when on your 13-2 chart you're beginning to lose momentum. You may have three divergences on the 5-1 here, letting you know that the market may terminate at least for a little bit. And then when you get up to that high, those same three divergences let you know that even with odds favorable momentum, it may be pushing. And it goes all the way down to that area. So Alyssa was asking if three divergences pop up, is that an indication to get out? So on this chart, we'll do this one. Let's say, for example, I enter the market right here. It's a high probability trend trade. Everything looks good. My target areas are below me. I've had one loss of momentum with odds favorable triggers. I'm not worried about it, right? That's okay. It's just one divergence. On my 13-2, I have strong triggers and I have nothing in the way. So Alyssa, the second divergence prints, right? Still have odds favorable momentum. In your brain, you're still thinking, I'm great to go. 13-2 says we're going. I'm going to stick with the 13-2. When this pivot forms, your stop's probably right here. When that third divergence prints, especially if it's higher, especially if anything happens here, this third divergence is going to be true on the third bar. So Alyssa, if I'm in a trade and my 5-1 is telling me that it's slowing down with three divergences, my smalls have gone inside the large, I'm probably going to take an exit when that third divergence is true. I'm going to get out, and I'll just wait for the next best of the best. This is my plan if I'm in a trade. You can identify that slowdown on the 5-1 to help give you an advantage. There's also the trade, absolutely, the 50-50 trade, right? So guys, we're talking about a high probability trend trade right now. We're talking about the rules for a high probability trade. And this is when all of your indicators on every chart line up for the trade. Strongest triggers, no termination conditions, perfect entries. The average human being is going to get bored silly looking for nothing but high probability trend trades. So your first 30 days teaching you to read your indicators is going to set you up for a medium probability trade. And this is defined as when most indicators line up for a trade, however a small issue exists. Your ability to read your charts is going to help you identify that small issue. And this really is going to be the vast majority of your trades. When executing medium probability trades, you'll take the trades and manage them assertively. Your ability to read the charts allow you to do that. If there's trouble in the way, you'll identify it through your chart reading, take a portion off of that position at the trouble spot, reduce risk to a zero loss level. So Alyssa, here's the second half of that answer for you. If you take a medium probability trade and enter the market right here, and this is where I think that reading divergence has a lot to do with the type of trades you took. If you take a medium probability trade where maybe an issue exists, you can identify your first trouble spot. And here's where you can get to a zero loss. Take some profits, get to a zero loss. And if you're still in that medium probability trade, you can identify that change. So being able to recognize change like divergence on the smaller chart will help you preserve equity a little bit. You'll be able to see when things have the potential to change. And because it's not high probability, you'll be able to protect those assets a little bit. So if it's a high probability trade, I'm going to wait for that third. If it's a medium probability trade, a second divergence is enough to get me to a zero loss level. Does that make sense? And then as you go through and look at your trades that you take, what you'll find, let's open yours one more time. You're the class example today. Here you have one of those 50-50 trades. Odds favorable momentum, the large haven't broken through yet. As you come down and get in, if a second divergence prints, if your trigger lines change, it's a great management opportunity. You've identified your first trouble spot. You've identified your target. I'm sure you were break even when the first profits were taken. But on this medium probability trade, you can identify that change on the 5-1 to help you make better decisions when the areas aren't completely broken. So study those divergences, see how they react, and then there's a lot of patterns that you guys will begin to recognize as well as they go through. But I kind of did a little digression there, guys. So rule number 1, strong triggers. Everybody okay with that? Identifying smalls above the large, smalls below the large, waiting for the space to be between the two to give you an advantage. We're all good on rule number 1. Pretty easy to recognize. Rule number 2, making sure that you're not trading into termination conditions. When you're not trading into termination conditions, you have the advantage of a clear path, right? So we're going to go back to our 13.2, guys. We've already circled odds favorable. This is how we're going to study. We're going to make sure that there's no termination conditions. So I'm going to load my indicators. Hey, Terrence, are you comfortable taking a picture of both charts? Just curious. One of the things that helps me an awful lot is let me know what your large chart was doing too. Give me a reason why you took what you took. It's great. This class will give you as much feedback as you can stand, as long as you give me as much information as you can. And maybe, I mean, it looks like you were successful on that one. Maybe we can find a way just to help you reduce risk. So guys, we're coming through now, and I'm looking at these, and one thing I see right now is if I'm identifying termination conditions, guys, here's a consolidating market. There is a pivot stop out termination condition, right? There's a pivot stop out termination condition. Can't go short into this area, can't go long into this area. Guys, this is what the market looks like when it's consolidating. Let it break out. But here we had smalls through, odds favorable, circle a tail. Same thing here, great look. Here price reaches resistance and the trigger lines don't go through. So I'm going to get rid of that circle. So far, 2 of our 3 are potential trades. This one's directly into a termination condition. Let's lose that circle. Directly into a termination condition. Directly into a termination condition. So guys, give me a Y in the room if you're with me. The only circles that we left were the ones that had odds favorable momentum and the ones that had no termination conditions. So we're only on 2 circles right now. This is your study way, guys. So when we have those 2 advantages, we're going to pinpoint that entry, guys. This is when we go to the 5-1 chart. This is when we look and we refine that broad stroke of a brush. We give ourselves the best chance of success. During the live market, when the rules are met, when you have rules 1 and 2 met, your 5-1 is going to look like this. This is where you start looking for an entry. Everything is green in the uptrend. Large triggers should be strong in the direction of the trend. And we're going to look for areas on that 5-1. Fibs, mid bands, 1-to-1s that are going to fall inside of those large triggers that are coming up like a shark, ready to breach. This is all we're doing right now. We're identifying areas, making sure that our large triggers are strong, because rule number 3 says that we're going to use a limit order, which means that we're going to wait for the market to come to us. And we're going to have that limit order waiting to buy or sell a pullback, which is a small retracement in price. And that pullback is going to come to an area inside of favorable large triggers. So all we need to do now is wait for a pullback. And that pullback starts with a reversal bar, with all of these up bars in this uptrend, with odds favorable momentum, with nothing in the way. We want it to go down. We want sellers to show up and push that market as hard as they can against that momentum, just to get us to our window of opportunity. When this reversal bar prints, we're going to identify a window of opportunity, and that's going to be for longs from our highest point of support to our lowest point of support inside of favorable large triggers. For shorts, it'll be from that lowest point of resistance to the highest point of resistance inside of favorable large triggers. And there's a little confusion on the window of opportunity sometimes, so I made a picture because that's what I do to clarify. And of course, I can't find the picture that I made. So we'll just make another picture probably. Nope, that was the one. When we're looking at our window of opportunity, 2 things happen. We're looking at our large triggers, so we're looking at the area from the top of the large triggers to the bottom of the large triggers. And then the rules say that our area needs to be inside of favorable large triggers. So the window of opportunity goes from the highest point of support to the lowest point of support. This is my window of opportunity that falls inside of favorable large triggers. Does that make sense? It's not from the top of the triggers, it's from that actual area inside of favorable large triggers. So we get our reversal bar, we wait for the pullback. We've activated our limit order at the top of the window, and one of two things are going to happen. The market's either going to pull back to that window and it's going to fill our order, and we're going to be in a long trade at 79.21. And we're in this trade, remember, because of the advantages that our rules gave us, because of the advantage of momentum, because of the advantage of a clear path, and because now we've added that advantage of entering the market where it's likely to continue. My initial risk is going to be below the window of opportunity, below that lowest point of support inside of favorable large triggers, because if the market pushes beyond, well, then now I'm not in that best of the best spot. I've given up that advantage of where it's likely to continue. I want to exit the trade and wait for the next opportunity. Remember that this is a trade that typically wins when you learn to execute it, and it won't take you long to find that entry, 70 to 80% of the time. Guys, the ugly truth of day trading is that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. You can just consider this a cost of doing business. Sometimes everything is going to be perfect. Every advantage is going to be present, and somebody with deeper pockets than you wants the market to go against your trade. There's nothing you can do about it. You have to learn to build trust in this so that every time the rules are met, you believe in the advantages, you pull the trigger. Because 70 to 80% of the time, guys, this is where you end up. Profit target reached. And when that market begins to move in the direction of the trend, that reversal bar up after we enter the market, our risk is going to be reduced to below that pivot, below that reversal bar. And because we waited for the pullback, we've increased our profit potential. So I'm going to ask, give me a Y in the room if you're with me. We're going to run through the three advantages of three rules. Rule number one gives you the advantage of momentum. Feel good about it? Guys, let this set the tone. Let the 13-2 lead the way every time you look for a trade. Rule number two says don't trade in determination conditions. Guys, give yourself the advantage of a clear path. And then finally, rule number three lets you pinpoint where that market is likely to continue. And this is a big patience piece, guys, and I'm going to show you why. I'm going to take a picture. We had a great example of this yesterday. My rules say that the market has to pull back to an area of support inside of favorable large triggers. Pretty simple. That's the rule. This is what has to happen. Human nature and emotion sees that one bar start to tick up before my entry is reached, before I've given myself the advantage of that area where the market is likely to continue. Guys, I can't tell you how many new user entries I see at the top of this bar. Anyone else ever done that? Exactly, Terrence. Fear of missing out. And then what happens more often than not? The market comes right back to where it should be, right? Well, if we get in all the way up here, your stop still has to go where the market shouldn't, which means you have increased your risk dramatically. And when you've increased your risk dramatically, you've also reduced your profit potential. It's okay to take these trades in the beginning, guys. Everybody does. Fear of missing out's a very real part of being a day trader. That fear of missing out goes away when you learn to trust your rules. So let's go through that study. Guys, crude oil, the technical term for this is ugly. Thank goodness that you have rules in place that keep you safe. Termination, 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 termination. Guys, this is a consolidating market. In order for me to take a trade at this point, I either need to break this top area that's holding or break this lower area that's holding. My software lets me identify that we're consolidating. These fibs, these divergence highs and lows, let me know exactly where these deep pockets investors are going to fight it out. So while they fight it out, let's go back to our first circle right here, 816. We'll make it kind of big. There's our first circle. Odds favorable, everything coming through. On my 5-1, the market gives me a reversal bar and it comes right back to an area of resistance inside of favorable large triggers. This isn't the prettiest look ever, but it fits the rules, doesn't it? And then that market continues down with the odds favorable momentum. Guys, this is a high probability trend trade. We go the other direction. We get to see the one that Miss Alyssa caught this morning. Odds favorable. Look at this market screaming up. And it pulls right back to an area of support inside of favorable large triggers. Stop keeps you safe. If you're in at 77.90, 77.91, plenty of room to make an awful lot of money. If you go back and get in the habit every day, and what's pretty amazing is if you do this at the end of the day, if you come back at the end of the day and you start looking for these opportunities, a couple things happen. Sometimes you're like, man, I never found a trade today. Gosh, what happened? I'm not seeing things. And then you realize that you're seeing things just fine, just that those opportunities didn't present themselves as often as you would have hoped. It also teaches you to be patient. And then if you're scrolling back looking as well, guys, look at this. It's also going to teach you to respect termination conditions. And I want you to see, we talked about when a mid-band might be a termination condition. Price pulls all the way down to a mid-band. Large triggers remain a full bar away. You see it here as well. Price reaches support. Large triggers don't follow. It closes the gap. Price reaches the mid-band and resistance. Full bar away. Closes the gap. Reaches support. Full bar away. Closes the gap. Over and over, guys. Price reaches support. Triggers don't follow. Closes the gap. Reaches a mid-band, triggers don't follow, closes a gap. I want you to learn to recognize this pattern. Let me make this bigger. Guys, I take a lot of pictures. Watch this, hypoxic. I'm going to give you the Sunday school answer. Give me 30 days of inside. 30 days of taking trades from inside the large triggers. And I love your question because what your question is asking is, hey, Mark, how do I break my rules? Until you learn to read your indicators to a point where you see that pattern over and over and over and you're able to define your advantages. Alyssa's was inside of favorable large triggers. Let's take a look. Alyssa, I just need to save your picture, I think, so I don't have to keep going back to it. So hypoxic, let's go through it. Window of opportunity, right? From the top of the large triggers to the bottom of the large triggers, this is where I'm looking for the window. Do you see where she entered? Just above, a tick or two above the area of support inside of favorable large triggers. So she's coming in the window inside of favorable large triggers. Her initial stop, 12 to 14 ticks, has her stop down here outside of the window. And you'll notice that price It exceeded the window just a little bit, right? But with this much momentum, with everything breaking through areas, remember, you have a freight train doing this. To expect it to pull back too terribly far, it typically doesn't. And that's why we say enter at the top of the window. And that's exactly what Alyssa did. A tick or two above that midband, inside of favorable large triggers, and her initial stop was down here where the market shouldn't go. Does that make sense? If you try to place an order right here, more often than not, you're not going to get filled. And then the next part of that is you can do whatever you want with your trading. And what you're going to find is that your ability to see things is going to grow exponentially over the next 30, 60, 90 days. I want to give you guys this picture for your spreadsheet. Price reaches a midband. Large triggers remain a full bar away. Can form a reversal bar before they reach triggers. Midband is a termination condition. Price reaches the midband. Large triggers are a full bar away. I'm going to give you one more little note. This area between the top of the bar and the large triggers is like a vacuum. Price sucks back to the large triggers. Trades in the vacuum rarely work, and apparently I can't spell vacuum this morning. 2 U's, not 2 C's. Guys, take this picture. Remember, we're filling up our spreadsheet, right? Filling it up with chart reading. It is, right? I was an English lit major too. There are a couple words in the English language that no matter how many times I spell them in my life, I spell them wrong the first time. Restaurant used to be one of those words. Vacuum apparently is one of those words. Antenna gets me every time. Don't know why. Guys, if I take this picture, upload it to Screencast, it's going to give me that Screencast link. I'm going to take that link and I'm going to go to chart reading things. I'm going to put the link in and I'm going to call it Midband as termination conditions. I could also put it over here. Here's a picture that says vacuum. It's the exact same picture, right? Acts as a vacuum. If you look at my spreadsheet again, large trigger, full bar away. There's another picture showing me that exact same pattern. So what happens is every time I see that happen, I start taking a picture. And the more of these pictures that you take, the more of these pictures that you annotate, the more you begin to recognize these patterns. So give yourself the advantage every time. Give yourself the advantage of understanding patterns. Give yourself the advantage of recognizing advantages. Look at them stuck in this range. We're exercising our patience bone. And what's the 5-1 look like when it's stuck? Guys, this is a battle between buyers and sellers right now. And that's exactly what you're witnessing is a battle between buyers and sellers, between two deep pockets investors, and they both want to get their way, and neither of them is giving an inch, guys. Two types of people in the market. This is my little segue. That's it. It's just range bound. And this analogy helped me. I think of the deep pockets investors, the institutional traders, the guys with millions of dollars and thousands upon thousands of contracts. Those are the sharks, guys. Those are the guys that make things happen. Those are the ones that give us strong tops and bottoms. Those are the ones that establish that momentum. Those are the ones that know where these termination conditions are. And this is where the fight's happening. Your sellers push it down. Sharks push. Buyers push it right back to resistance. Look at that. Sellers try to push again. Can't establish any momentum. Buyers push it right back to that key area, right to that divergence high. Sellers do it too. Line in the sand. This is where the buyers fight. Right back to it. Right back to it. Guys, if you try to jump in the middle of this and take a chunk out of it before these guys are done fighting, that's you right there. That's that fish. You just became lunch. So be a remora. Let them fight it out. When they're done fighting, let them establish odds favorable momentum for you. Let them establish a clear path. We know where the fibs are. We know where they're going to fight. And then you take your little chunk out of it. Make a little bit of money 4 or 5 times a day with the best of the best with the highest advantages. And don't try to be a shark. And you see it on your 5-1. You see that indecision, that fight on a smaller, faster chart. You see that fight on a larger chart. Guys, your software gives you such an advantage of being able to recognize this as it's happening in the moment. All right, we made it through our first hour. Let's look at the S&P. Is it giving us any opportunities? Here's one of those 50-50 trades, right? Small triggers above the large triggers. The large triggers are wide. They're angled in the direction of the trend. This look tells me that this area has the potential to break, but it hasn't broken yet, right? The large triggers haven't cleared. So it's still an area that has the potential to stop the market, but it also has the potential to break because of odds favorable momentum. Give me a Y in the room if you're with me on that. This is what we call a 50-50 look. And 50-50 has nothing to do, I mean nothing to do with your odds of being successful in the trade. It simply means that the small have broken, the large have not. 50% of your triggers are through, 50% of your triggers are not. Your entry conditions on the 5-1 should be perfect if you're a new user taking this first medium probability trade. What do I mean when I say your entry should be perfect? When I have a 50-50 trade, I don't want to see divergence. I don't want to see a loss of momentum on the 5-1. When I have a 50-50 trade, there it is again, with divergence. Let me just find a picture. What do I consider the perfect look? When I have a 50-50, when my smalls are through, when my large are not, and this one's pretty close, I want no divergence on my 5-1, no loss of momentum. I want a small window of opportunity. I want those large triggers, the synthetic trending one on top of the other, and I want strong triggers, smalls above the large, that distance, that space. Smalls have broken through that key area, the large have not. No divergence prints. This one fits the plan on the pullback. "50-50 trade. Smalls are through the area, the large are not. Divergence prints. This is not my trade. And this is not my trade initially because look what happens. This happens more often than it doesn't when divergence prints on an area that's not completely broken. So when we look at the 50-50 with those divergences, guys, this is a great cue to keep you out of trouble. Pretty cool, right? Rules should make your world go round. How to plot a strategy? I don't. Yuri, do me a favor. John's probably pretty busy this morning with Melinda. I know that he can help you do it. He helped me do it once. I don't remember how. I'm not going to lie. Jason may be able to help you as well. But even more so, one of the cool things that we have at our disposal is if I hit help, let's search. Where's the search bar? There we go. Search. Let's call it plot strategy. No. There may be something in there. Jason may be a quicker option for you. I know that John knows how to do it second nature. He showed me once a long time ago, but I didn't care for it. I like to keep things super simple, so I've kind of let that fall out of my brain. John probably won't be in the room today too much, if I had to guess. But Jason may be able to get you set up on that if he's hanging out doing some stuff. Put a ticket in with him. He's about the most helpful guy in the world. All right, guys, so this is our first hour. We made it through. We talked about the rules. We're going to come back in the second hour, and we're going to do a couple things. The first thing that we're going to do in the second hour is we're going to look at this template together that I just posted in the room, and this is how to write an example plan. This is how to write a trading plan to help you understand what it is that you're looking for, to help you pinpoint entries, and we're going to talk a little bit about some management as well. Guys, when we talk about patterns, look at that, 38.73, 1, 2, 3 divergences, 4 divergences in the same area, and that market pushed right back up. Identifying change on the smaller chart before it happens on the larger. Pretty cool, right? When I come back, we're going to talk about the live market more. I'm going to start looking at the charts that you guys have posted. We're going to talk about how to write a plan, a little bit about management, and then we'll just keep going strong today. If you guys have questions, put them in the room. If you take a trade, put them in the room. Edwin D, you say max loss. Write your rules on there. Let me know. I feel like you can identify what the challenge was if you write your rules. We'll talk about it though when I get back. Guys, I'll be back in just a few. Trade away if your rules are met, if you have odds favorable, if there's no termination conditions, if you take a pullback to an area of support inside of favorable large triggers. Post that picture. I'll be back in a few, guys. true, right? Have I mentioned just how much I love being your husband? How much I love waking up with you every day. Walking by. All right, back to the monkeys. Thank you. All right, guys, we are back. Whoops. We are back. I left a hot mic on YouTube. Hopefully it wasn't too silly. All right, so what do we think? Who's going to show me a picture? Small's above the large. Large or wide, angled in the direction of the trend. Absolutely no termination conditions. Picture perfect pullback to an area of support inside of favorable large triggers. NG, how did you miss that pullback? Were you trying to save money and get in lower? Hopefully you were grabbing a cup of coffee or something. Okay, well that's a fair reason. How do I know this is a picture perfect trade? Check it out, guys. We have a spreadsheet or a checklist that I can compare every trade with. Is the market coming from a good top or bottom? It's coming from a termination condition that caused a full reversal. Do I have odds favorable momentum? Guys, if you don't see why this is the perfect trade and one you should never miss, I need you to raise your hand. No termination conditions. Area for entry inside of favorable large triggers. Hypoxic, this is a good one for you too. There's your large triggers. There's your window of opportunity inside of favorable large triggers. Do you see how because of the momentum, because of nothing in the way, it made it right to the top, didn't it? Once you were in this trade, risk should have been next to nothing. Guys, this is such a pretty trade. I'm going to take that screenshot capture. I'm going to go to my spreadsheet and I'm going to make sure that I can come back and study this look each and every morning and make sure that this is one that I always catch. There we go. We're up to 82. All right, guys, I'm going to scroll back. We're going to start looking through some of your pictures, see what you guys did. No, we're not. We're not going to do that yet. This is what we're going to do first. So I just gave you the checklist, right? How do I know that's a great trade? Because I put my checklist against it. Gary puts a checklist on every trade that he does. You nailed that one, Gary. But we'll talk about that in a minute. How do I know what I'm looking for? How do I know what it is that I should be taking each and every time? Well, guys, you write a plan. Plan's pretty simple. This is the most remedial version that I've ever written. This is something that I wrote based off of I did a private session with a gentleman that was chasing everything. And I mean everything. He was chasing edge trades and momentum trades and counter trend trades and all of these different trades. And I said, all right, let's refine, let's focus, let's get you focused on the best of the best. And guys, I'm going to put my disclaimer in here. I've never had anybody follow this plan to the letter and not be successful. Do with that information what you will. This is an example of how to write your plan, guys. And the first thing is use the phrase my trade is. My trade is the high probability trend trade. I'm not taking the Nexgen high probability trend trade. I'm not doing what Gary does. I'm not taking the Alyssa trade or the hypoxic trade. I'm not focused on what 10KM is doing. I'm owning this 100%. This is my trade. And all I'm doing is defining my entry point. To enter this trade, I must have the conditions of the checklist met. Guys, I just put the checklist in the room for you. This first one is the market coming from a good top or bottom. It even says these increase the likelihood of success, but it's not mandatory. I can get a great trade without a strong top or bottom. When I have odds favorable momentum, when I have no termination conditions, and where I have an area for entry inside of favorable large triggers. And then I take pictures of my perfect entry. Guys, we've already taken 2 today. I'm up to almost 80 pictures of my perfect entry. I'll put a couple in here just to remind me. And all I've done in 1/3 of a piece of a paper is written a trading plan for a trade that has been proven to win more than it loses. I've defined my entry in words and pictures, and that's it. This is my commitment for 30 days. As I get into medium probability trades, my first one's that 50-50 trade. So I have to define if the entry conditions change for me, what are they? Well, on 50-50 trades, no divergence will be present on the 5-1. I can't stress this enough for new users, guys. This one loses with divergence a lot more than it wins. So I put a picture of what it looks like. Smalls below the large. Large haven't broken. Absolutely no divergence. Small window of opportunity. Strong triggers. There's a quick winner. Once that divergence prints, it changes everything. And the market ultimately ends up turning. Small triggers must be outside of the large. So guys, I've defined not only my high probability trend trade, but now I've added in my medium probability trade. Learning to day trade is like eating an elephant. Has everyone heard that? How do you eat an elephant? One bite at a time, right? Learning to enter the market at the right spot is your first bite. Once you learn to enter the market, and guys, this is the one that gets the new users, is you have to learn how to manage it. You're going to spend 30 days focused on nothing but that perfect entry. But you still need to manage the trade, so why not keep it mechanical? Why not keep it methodical? Why not take your emotions, your opinions, your thoughts, your fears out of it? And this is the easiest way that I've done this. Clearly define your management plan. I will trade 2 contracts. There's no room for wiggle. I will trade 2 contracts. If I lose a trade, I won't trade 4 to try to make it back. If I'm scared of a trade, I won't trade one because I don't know if it's going to work. In the beginning, I'm going to trade 2 contracts. And my initial stop will be 12 ticks. My input to NinjaTrader will be that my initial stop starts at 12 ticks. And then I'll move it above or below that window of opportunity. This is my first mechanical movement of a stop. It'll be moved 2 ticks above or below the reversal bar in the direction of my trade. This is my second mechanical stop movement. Once I do that, I'm either going to get stopped out or I'm going to take profits at $100 on my first contract. If I take profits, my stop gets moved to break even. And my second target will be 200. Guys, this takes all of your fear out. This takes all of your hope, all of your, oh my gosh, all of my, I hope it doesn't come get me, because you've already taken the best of the best entry. The odds of you hitting $100 are pretty good. Once you have that $100 in the bank, that dopamine kick makes you feel really good about letting that second target go to 200. The reality is in the beginning, you're probably going to have a lot of trades that are $100 and break-even result. So from your perfect entry, now you're going to start taking pictures to develop a management plan. I had odds favorable. I had no termination conditions. I entered at the best of the best spot. I took my profits. But now that I'm learning to read my indicators, this level of momentum on the 13.2 says give that last contract a chance to get down to that next Fibonacci area. And I can tell you on this trade, that's exactly what happened. But you're going to develop a management plan based on your perfect entry. And you're going to develop your perfect entry based on your ability to recognize advantages because of your chart reading. Give me a Y in the room if you're with me, guys. This is one of the most underused things by new traders is they choose to not write a plan. And I had a really smart guy tell me once, if you don't have a plan written, you don't have a plan. Your trade should look the same no matter what. If you want that mechanical management plan, guys, if you want to see it in pictures, I've done a 4-picture series that uses it, that talks about it, that highlights it and shows you exactly what it should be. I could put these into the room for you. They're labeled Management 1, Management 2, Management 3, Management 4. Put them in order. Put them in your spreadsheet. Kind of takes the worry out of it in the beginning. All right, so we've talked about writing a plan. We've talked about management. We've talked about what the perfect trade looks like. Guys, look at this. Straight to Fibonacci resistance, almost to the tick. That was a 10-point move, almost instantly. I'm going to go through. We're going to start looking at some pictures, guys. And just so you know, when I look at your pictures, we're talking about rules being met. If your rules are not the high probability trend trade rules, write your rules on the chart, guys. Let me know what it is that you're looking to do. Gary does a great job of that. Checklist said no. I love this. We were in a consolidated market. Smalls below the large, larger wide, angle down. He took a short here. Looks like it worked out for a little bit. And then as he comes through, he's recognizing the termination conditions. He's looking at not having the advantage. He chooses not to take the trade. Keeps him safe. Guys, some of the best pictures you can take are when your rules are not met. Pivot from space to the mid-band, 1 full bar away. Not taking any counter trend trades. I like it. Directly into termination conditions. Once again, it's nothing more than chart reading, keeping Gary out of harm's way, using a checklist to make sure And then Carl, it looks like you got caught up in a range-bound market. Termination condition, it's a good top, right? As the market pulls down, right here at 62, we had reached a termination condition, Carl. That cyan line, let me go to the instructions. When we talk about termination conditions, a cyan divergence low, a magenta divergence high, we went directly into a cyan low. All of the triggers remained above. Rule number 2 would have kept you out of this trade, right? This termination condition, and guys, this is an important lesson. This termination condition means that your rules aren't met. If your rules aren't met, you're obligated to not take this trade. It doesn't matter if the mid-band's inside of large triggers. It doesn't matter if the background is red. Rule number 2 says don't take the trade. Small loss, good management, but wouldn't it be great to have a rule in place that keeps this from happening? Because the same thing could have happened here. Pretty cool. I love it. I love it when rules keep me safe. It just helps me believe my rules. Let's see where we're at. Gary, we got another one from you. A lot of chart reading from Gary today. Waiting to break out of the termination condition channel. I love it. Recognizing when the market's bouncing, no advantages, waiting for the breakout. Great chart reading. Not a termination area. Good question. Guys, here's a good lesson. What has to happen to have a termination condition? Do you guys remember the formula? The first thing is price reaches an area. Where are the triggers? So Gary, you have a question mark on it. Price did not reach an area, right? This is just a pivot with a little bit of divergence. Does that make sense? Here, we have a termination condition. Well, and remember, it'll form a cyan line if there's divergence, but it's just a pivot. Gary, if price comes back up and reaches that pivot and no trigger lines go through, then we have a termination condition. I think that's an awesome question, and that probably just provided some clarity for people. And if you come back to the termination condition section, one of the first pictures is the exact same thing. This pivot creates a divergence low. It's when price retests that divergence low from the pivot, triggers don't break. That's when it becomes a termination condition. Thanks for that question, Gary. That was a good one. Let me see where we're at. A lot of pictures. I love a lot of pictures, guys. More chart reading from Gary. Reversal signal at 8 range. No other rules met, so no trade. Perfect. Rules not met, 8 range doesn't matter. Waiting for the knife fight to resolve itself. Love it. Guys, one of the great things you can do is take pictures of everything. Terrence, I know you're just coming back. Can I make a quick observation on this one? And guys, I'm going to make observations, and they're never meant to make you feel bad about what you're doing. But I believe that anytime you annotate a chart, make sure that your annotation matches what's happening. You said you entered on a stab back. There was a little stab back, but you entered at the top of the bar after the stab back, above the 1-to-1s. Maybe this is a picture-perfect trade. I don't know what's happening on the 13-2. Maybe everything about this trade is amazing, but it looks like we didn't wait for the pullback to the area inside of favorable large triggers because you thought maybe it was going without you. And I could be wrong. And guys, what you'll find is that I'm wrong a lot. It looks like one of those situations where it started to go without you and you thought, oh man, I better get into that trade. I could be wrong, and I think that you posted your other chart, so we'll see in a minute. Look at Gary, more chart reading. Gary looking for the sell. Pivot not from an area. You have odds favorable. It's 50-50. And Gary, I'm not sure what happened here. You may have closed that one out. This is 50-50 on 3 areas that have the potential to break but haven't broken. I do a little area counting every now and then just to see. You've reached your target from a pivot from nowhere with divergence already. Hopefully that one worked out for you. Terrence, I think this is the whole picture. Nope, this is a different one. So let's go through and take a look. So we're getting in right here. Couple things. All right, Terrence, are you with me? Awesome. So I like and I'm going to talk through everything that I like on it, Terrence. I'm going to talk about the one thing that I think for me creates a challenge. I love that you're coming from a termination condition. You've got these 1-to-1s. You have a full reversal. It creates odds favorable momentum. That is without a doubt. That's a lot of good stuff going on. The things that I don't care for. So it's a 50-50. Do you recognize the 50-50, Terrence? The large haven't broken, but the smalls have for sure. Still can be an amazing trade. For me, divergence prints on the 50-50. So the area is not broken and I'm losing momentum. This isn't a great look for a 50-50 trade. But if you're gonna take this look, you've got to commit to it a little bit. You're not waiting for the pullback to the areas inside. I feel like even a 54 entry, if you're going to take this trade, probably gives you a better chance for success. Letting it come back to that area inside of favorable large triggers, and these large triggers at the time would have been down below here, closer to 54. If you wait for that pullback, when this one comes, you might have gotten the same entry. It's coming back. You're trading the potential to break, and you have a loss of momentum. I like a lower entry. Let it break. Let it pull back to that key area. And 54 is kind of your confluence of areas. 54 shows up here, and 54 shows up here. And the areas aren't broken, and you're losing momentum, and the large triggers are trying to come through. That divergence for me, it takes away a little bit of my advantage. or enough of my advantage that I don't care to take the trade. You'll have to develop your own plan on it, but waiting for the pullback to the area, and then if I'm taking a 50-50, and let me know if this makes sense. If I'm taking a 50-50 on something with the potential to break, I'm looking for that deeper pullback if divergence prints, that loss of momentum. And I'm looking for things that line up, that pullback to the large triggers, that pullback to support, that pullback to support inside of the large triggers. And then keeping my stop. And this is a hard one, probably below that fib, because at the time of your reversal bar, that fib was inside of favorable large triggers. Your window of opportunity was this big. It changed a little bit as it went, but it still overran just a little. It's a great setup. That divergence, in my opinion, that's the killer on the setup. Does that make sense? A loss of momentum can provide a deeper pullback. Gary, still reading those charts. Awesome. And Terrence, just to reiterate, beautiful setup. Everything about this read was perfect. Termination, full reversal, odds favorable. Everything about this setup was perfect except for that divergence. It gave you that deeper push and got you. I like to celebrate as many victories as we can. Gary, directly into a termination condition. No trade. Not a possible trade setup, Gary, right? Termination condition, not a possible trade setup. Rules not met. 50-50 trade. Two divergences on the 50-50 trade. He's looking at that loss of momentum. Terrence, there's that same lesson we just talked about. It's a great setup. It's smalls. It's terminations. It's full reversal. It's odds favorable. These two divergences take a lot of the steam out of it, and you just don't know where it's going to drop to. And then Edwin, same lesson, I think. 50-50 trade. Smalls below the large are wide. I can't tell where it's coming from. I can't tell if there was divergence on the 50-50. And you hop in. It's a hard chart to read. The ES at 939. Let's take a look. So that trade, Ed, you had a loss of momentum. You had a second loss of momentum. You had another loss of momentum on a 50-50. You're just giving away advantages at this point. And if you got in at the right spot, if you got in just below the mid band, you should have had maybe 2 or 3 ticks of risk on there. And probably don't want to hold that trade. You got in late. It had already tried to push through on that 50-50 with all those divergences, and you took a big loser. Not a time I would take a max loss. 50-50 with divergence, I'm going to be as judicious as I can. 50-50, 2 divergences, and it does exactly what we expect. Guys, nobody ever believes me when I say this, and I don't say it for any other reason than to give you guys advantages. So let me type it in bold print. When divergence prints on 50-50 trades, it's okay for it to not be your trade. And I know that we get excited and we want to be in the market and we want to take these trades because if it wins, oh my gosh, it's going to be the best winner ever, right? I've done it. I've done it. So Ed, one thing that you can do, you've got this great 8 range chart. If you get divergence on a 50-50, there's absolutely no reason you can't just wait for a market flow signal from the area, and you never got it. It would have kept you safe. Let's look at the other one. Never got it. Would have kept you safe. So maybe we're not saying don't take 50-50s with divergence if that's your thing, but you have this unbelievable tool over here where you can get a little confirmation if you're just hell-bent on taking those trades. And Gary, you say possible trade, but you don't have rules for this one. Not here, Gary. Everything's down here. Strong triggers, everything's down. Not a possible trade. There is no way to justify and validate taking anything here. The flip side, what about right here? What about when you get smalls above all the large? What about when the large start to roll? If this area is really anticipated to hold for the market to go up, let that slowdown happen and look for an opportunity. But at this point, all your trigger lines are below resistance in what's been a consolidated market. I just don't think that without getting extremely creative, you could justify any sort of trade there. Way too many advantages given away. But then the advantages present themselves. Beautiful pre-trade picture. Guys, look at this. He knew exactly where he wanted to get in. Good top or bottom? I disagree. I think you had a good bottom. Termination conditions? No. Odds favorable? Yes. Area for entry? Yes. 8 range? Yes. Checklist met. There's a pre-trade. I wonder how that turned out. Oh, still coming. I bet it looked like Yuri's. Yuri, beautiful trade. Gary, beautiful trade. Stress-free. Barinder, beautiful trade. Patiently, trend trade, out at the 1-to-1s. Absolutely beautiful, gentlemen. Gary, same trade, 100% checklist. Absolutely outstanding. Then you go over to crude and you have a 50-50. There's one with divergence, right? So Ed, if you're with me, check this out. 50-50, smalls below the large are wide, they're angled in the direction of the trend. There's that divergence, right? If you wait for the market flow signal, there's your opportunity. If you're not using market flow, it's okay. If you are using market flow, there's your signal to get you in. Use the tools that you have. Woo, we are blowing through these. NG time, let's see what you have. Just a little chart reading, right? Range bound. Let it break. What do I see? NG, I see exactly what you see. I see a market with sellers and buyers fighting it out. And I want you guys to look at this because this is a big deal too. What's running right down the middle of that fight? Do you see it? If you don't think that deep pockets investors know where these fibs are, you're fooling yourself, guys. These fibs provide you the greatest advantage ever, and this is why. Terrence, do you have any specific questions about it? We can. I'm happy to. Guys, it's holiday trading. The market's not doing a whole lot, so the more questions you guys have, I'm glad to go through it. Never used it? Let's get through the rest of these charts, and then we'll slide over there. We'll look at the instructions and see what they say. NG time, I saw exactly what you saw there. Earl, 50-50 trade. Small's above the large are wide, they're angled in the direction of the trend. You just kind of jumped in, right? I don't have an area inside of favorable large triggers. I'm just below resistance, divergence printed. A little bit of patience, Earl. Are you with me in here? I love this. So this entry, where the rules aren't met. Oh my gosh, Joel, I'm so sorry. I've been there. Go relax. Don't just get out of the room and go relax. Turn a movie on and hope that that 900 milligrams knocks you out. I've had 2 spine fusions, Joel. I get it when it's bad like that. I appreciate you giving me the note, but you are never obligated to write me a note. If you guys don't feel well, don't trade. That's such an important thing, and pain clouds a mind. As I want you to see this, and Earl, this was you, right? Guys, I get distracted. It's like squirrel. This entry, jumping in too early, not taking care of your rule number 3. Check it out, Earl. If you waited for the area of support, you might get a tick better, right? Understood, Joel. And I want to teach you, and I promise when your back feels better, I'll be able to teach you. Having gone through 2 of those surgeries, having gone through that excruciating back pain where it's tough just to sit still, it's a difficult learning environment. Yeah, breathe deep and just do nothing for a little bit. Do whatever makes you feel better. And I'll be here. I'm not going anywhere. And if you find yourself taking a trade, and you're like, man, I can't really focus, email me your chart. We'll talk about it. The response time won't be as fast, but we'll make sure that you get to where you want to be. Hypoxic. Let's look at the whole picture first. So what we have is a 50-50, right? Guys, I'm on the contact page. Let me put this in here. And I'm going to give a disclaimer. Guys, I will be as helpful as I possibly can. I always will. This is your forum for sharing pictures. This is your forum for asking questions. If you take a trade or you need something specific, always reach out. I'll do my best to answer. What I don't want to see, guys, is you guys dumping every trade you took for the day with unannotated charts, throwing it into my email, and saying, hey, Mark, what do you think? I'm going to say, I think you should post in class. But if you're one of my people that typically post in class, that typically share, maybe you take something aftermarket you want a little feedback on, guys, send it to me. I'm always happy to help. If you have a trading plan that you've written out that you want help with, you want a second set of eyes on, I'm always willing to help. But I'm not going to allow you to send me 50 pictures of charts because you're uncomfortable posting in class. Is that fair? I hope that's fair. Hypoxic, it was a 50-50 trade. So the small triggers had broken, the large triggers had not. We hadn't reached that next area of resistance. So what we have is a 50-50, an area that has the potential to break but hasn't. Earl's going to take the trade anyway. He says, I'm not worried about 50-50. I got great momentum. Everything says up. I feel good about it. But Earl, if you had just waited for the best of the best area, it gives you less risk. You don't have to sit out all of this. It makes it easier. Rule number 3 makes it easier to manage a trade. It makes it easier to minimize your risk. It makes it easier to maximize your profit potential. Does that make sense, Earl? We get excited, right? Especially when this one doesn't fit the rules and you're like, man, I really don't want it to go without me. But that little bit of patience, waiting for the best of the best, insisting on the best of the best, that's where the advantages come in, guys. Can't stress that enough. Gary, waiting for it to break. That's it. Range-bound markets, man. No reason to fight it. Termination. Everything says down. Termination. Gary, I love that you recognized it. Absolutely beautiful. Keeps you out of trouble. Amazing chart reading coming from you today, Gary. Paul, 50-50. Termination creates a full reversal, gives you odds favorable momentum, no divergence. Taking the first shot to get up to that next spot. Not a high probability trend trade, but Paul, an amazing chart read. Good job. And then we get the 50-50 with divergence, and you give it back. Split triggers, divergence, 50-50. Take care, 10KM. Waiting for a signal. Even just waiting for the signal. All right, Paul, I'm going to bust chops for a second. If you know that that takes away an advantage, how many of these trades do you have to lose before you believe it? My number was somewhere around 300. Just throwing that out there. I probably had to lose a 50-50 with divergence about 300 times before I stopped taking them. Yours is higher, Alex? And you know what I do now on 50-50 trades with divergence? I still don't take them because I'm not comfortable with them. But I look at my market flow chart and I see how many of the ones that go without me gave me signals and what the conditions were. But yeah, with the split triggers and divergence, Edwin D, you're in the thousands. It happens. Guys, everybody learns at their own pace, right? Gary, same thing, 50-50 with divergence. Didn't get. Gary, where is your 50-50 with divergence on the checklist? You and me both, Ed. That might be a good line in there, right? You say 50-50 trades of no divergence, enter trade. But what if you have divergence? What's your rule? See how that works? Loss of momentum, termination condition. Absolutely no trigger lines through. Loss of momentum. It shouldn't even be loss of momentum, no trade, Gary. It should be termination condition, no trade. Do you see it? That's a termination condition. That's anything can happen triggers at resistance. Nothing's breaking through. I'm going to go to the instructions real quick. I think the one thing about rule number 2 that people forget, guys, wait until a Fibonacci area breaks before continuing to take trend trades in the established direction with strong triggers. If you're on a 50-50 trade, guys, let's go back to, let me see if I can find one of mine. If it's 50-50 at an area, guys, you better have odds favorable momentum, right? Give that thing a fighting chance. And even with odds favorable momentum, this is what that loss of momentum does for you. No, I didn't take it. This is an older picture. That's an older picture, Paul. I don't know if you guys knew this about me, but I take a lot of pictures. There's a 50-50 with divergence, or no divergence. Picture perfect. With divergence, not in my plan. Let's see. There's one on split triggers, making sure that I have the absolute best of the best look. Here's one about the mid band as a termination condition, full bar away, pretty cool. Great lesson there. Here's one about losing momentum on the 13-2. Do you guys remember this picture? Were you in class for this one? When the 13-2 loses momentum, it typically pushes deeper. We took this picture, I think 5 days in a row with the exact same thing happening. Your chart reading things, guys, 50-50 chart reading. 50-50 with divergence. Huge window of opportunity. That's a good one. Let me share that one with you. Put it in your spreadsheet, guys. There you go, Gary. 50-50 trades with divergence on the 5-1. Use a market flow signal. How many pictures do you guys take a day? Checklist keeps you safe, right? I love it. There's all mine for the day. Got 2,250 pictures. This is about in the last 2 months, 3 months, maybe. Oh, I gotcha. Okay. Hold it. If the box isn't checked, you don't copy the cell. So on that one, it wasn't checked. It couldn't have been checked, right? But you still took the trade. Now I'm confused. Because it's there, but it wasn't followed. I'm confused. That's okay, I confuse easily, guys. So what's happening right now? Price reaches resistance, divergence prints. That's a great looking termination condition. Nothing to do. We're in a waiting game. It either has to break or it has to hold. Termination condition, 50-50 with divergence, no reason to take it. Termination condition. Guys, we're back into let it break, right? Let it break before you try to be a trader. Tesla's lost 60% year to date. It is a slow day, Paul. And guys, this is one of the things that you run into. Remember, the people that do this for a living, and let me kind of redefine who those people are. The people who have a plan, the people who have studied their plan, the people who execute their plan flawlessly because their plan has decidedly given them an advantage, they're done for the year. Those guys are skiing in Vail. Those ladies are hanging out in the Caribbean with a pina colada. They've done their work. They've mastered their craft. And they're not trading 3 days before Christmas. They're done. They're hanging out with their families, probably drinking Bloody Marys for breakfast. Exactly where you're going to be when you find that level of consistency, when you put yourself in a point where you have a plan, where your plan's been proven to win more than it loses, and when you execute that plan, when you stop taking the iffy trades. Paul's neighbor wrote a cool thing once. Paul showed it to me. I hope it's okay that I share this. He said that it was the patience, I'm going to paraphrase, that took him to being successful. And what it meant for him was staying out of iffy trades, staying out of the maybe trades, staying out of the trades that didn't have the advantage. Because if you take 5 trades a day, right? High probability trend trades, and you lose one of them, so you're hitting 80%. Or we'll say you take 4 and you lose 1, so you're hitting 75%. Let's keep it lower. In those 3 trades, you win $900 total. Just doing very mechanical $300. That one trade, let's just say it's a big loss. Let's say you lose $300, right? So you make net $600 for the day. You're patient. You wait for the best of the best. You're hitting 75% and you're making $600 a day. That's $3,000 a week, guys. That's a $12,000 month. That's $144,000 a year. Let that sink in for a second. $144,000 a year on a 2-lot. So what is that? $72,000 on a 1-lot. We'll say hypothetically. Guys, it's hypothetical math right now. I'm not a math guy. What if I take that 1-lot and I turn it into a 10-lot? I add 1 0. It grows exponentially. What if I'm so consistent that I turn it into a 100-lot eventually? The goal shouldn't be to catch every trade. The goal should be to catch the best trades that have the best chance of success. And then as you grow your account from your success, let your profits take you where they want to be. Yuri, that example plan that I showed you guys is as close to my plan as you can get. I don't take 50-50 trades with divergence. In my own personal trading, I don't take 50-50 trades with divergence. I've been teaching this class for 2 years. I've been looking at the market, reading indicators in a live scenario for 2 years. And the one thing that I know without question is that this look eats my lunch more than it doesn't. And like I said earlier, I took this trade based on hope for a long time. And finally, I got tired of giving away $200, $250 on a lower probability trade. Because what happens is if I'm trading and I only make $500 a day on absolutely perfect trades, how much of that $500 do iffy trades pull from it? You ever had a day where you're like, man, I won my high probability trade. I won my high probability trade. And you do it 2 or 3 times and you've made $50 on the day because you had to be active rather than with an advantage. See that a lot, guys. All right, I'm going to read this out. This is from, guys, this is from an old Nexgen trader. I'm not a good gauge on how long it takes because I played around for a long time. It takes several months to get comfortable. It's also hard to be truly disciplined in simulator. To really go, you have to trade completely disciplined for 2 weeks. When you think you're ready, no, let's see if this works trades because you're bored. When that works, start small with dollars and a max loss and gradually start playing with house money. Once you put a few together with real money, it will build. Concentration is key, especially when it's flat, slow like it has been lately until the Fed spoke today. This is from a few weeks ago. The hardest things are discipline and patience to skip the what ifs. So Yuri, this is a what if. What if it breaks? In your years of experience, how many high probability trades happen during a trading session? It varies every day. I've seen days where there's like 15 or 20. And then I've seen days where there's 2. So it just depends on what's going on. Where are we at today? Let's see. This is crude, right? We'll circle that tail. There's your consolidation. We'll circle that tail. Termination, termination. So Yuri, I see 2 today. And crude. Holiday trading. Guys, if you're in on demo, there's 1 in the ES. Maybe not a good one. This one's at the tail end of momentum. Might have been a trade. I'm not sure. Let's see. 813. Yeah, tail end of momentum. If you took that one, there's another one. But look at how today there's not an overwhelming amount of solid setups, right? But if you took the 3 trades that happened today and you only took $300 on each and the only trades you took were rules met high probability, that's a pretty good day, isn't it? What if you only made half of that? That's still a $2,200 week, right? That's an $8,800 month. That's coming in, I want to say, just shy of $100,000. JN posted holiday hours in the announcement page. That was the Thanksgiving schedule. Guys, here, I'll post it in our room. I guess I should know when I'm working, right? Guys, Thursday, we're going to shut it down at 11 Eastern. And then January 3rd, we'll be back. There won't be a live chat room until the 3rd. Tech support via Discord, Skype, or email will be available. Guys, we're not going to be working, but we're going to be around. Chances are, if we're trading, we're going to be in Discord. If you have a question, you know how to get a hold of us. I hope you know how to get a hold of us. Go to the contact page, guys. You'll be able to get a hold of somebody. We are all market junkies just like you. My email works. My Skype works, guys. Don't be afraid, especially if you're a demo. If you're coming into the holiday trading and you're on a demo and you have questions, reach out. If you're fine-tuning your plan, guys, reach out. During these hours, the 28th I'm leaving Austin. I'm on a plane. I'm headed to Florida. And I'm going to be in Florida until the 4th or 5th. So Tuesday I'll be teaching from Florida. Then I believe John will take the room on the day that I fly home. And everything's going to resume and we're going to get through it. So don't be afraid to reach out if you need help. Gary, let's see what you did. Things are starting to break. Anything can happen. No areas inside of favorable large triggers. Everything's on the wrong side for the HVA. Good chart reading. Just being patient. Definitely going to be a trouble spot after that bad 50-50. Paul, I love the chart reading on this one. Let it break, right? Just let it break. Termination holds. 50-50 fails. Support holds. Is that crude oil right now? 50-50 with divergence. Egads and little fishes. It happened again, guys. A reverse bingo. I told John I was joking the other day. I said, you know what? I said, these 50-50 divergences, I'm just going to start going short at the mid bands. Not really, because that's not a rules-based trade. But it's like, I think you have a better chance of making money jumping in short at the mid band with the divergences. That's how opposed to 50-50s with divergence I am. Guys, let it sort out. I like it. Reverse bingo. There's the vacuum sucking your money right out of the account. Guys, I'm going to go stretch my legs for a second. If your rules are met, take a trade. If they're not, take a picture. Let me know what you see. If you're brand new and you have questions, let me know. Terrence, when I get back, we're going to look at the market flow page. I'll be back in just a few minutes, guys. Some Christmas carols, guys. Do you see what I see? Look at those sharks going after it. Let them fight. Let them fight. Goal setting for 2023. I like it. Set those goals. Anything can happen. Waiting for the pullback. George, you had momentum. Strong trending on the 21. So you took a shot here in a little bit late, or maybe quite a bit late, and after the market flow signal. Nice trade, George. Taking advantage of all that. Everything says up. Every chart agrees, right? Paul, you took the same trade with the signal. Got your target. Re-entered. Got out quick. Pivot stop out. Not great momentum. Divergence prints. I like it. Made a little money. Looks like you got stopped out. Trying to see where that one happened. Entered 2, exited 1, out break even, but then you re-entered. Right on. Keeping busy, making money. I like it. Hey, Carl. Never really used a NinjaTrader 8. Believe market replay is a lot easier in 8 than 7. Can you review in class how to do market replay? To be honest with you, Carl, I'm not familiar with market replay in 8. I've never done it. But I can tell you, Carl, that just backing up your work is easy. Anytime you close a workspace on either one, it's going to ask you if you want to save it. Always click yes. And then when you reopen it, it's going to open up the same way that you closed it. As far as market replay on 8 goes, here's the link to 8. You can walk through, take a look. I do know in 8, when you download, you can just open up a workspace and go. You can do multiple days. But here's all of your information to make it happen. And here's the market replay on 8. Let me give you the video. And then that should help you. That should kind of get you where you need to be. Hope that's helpful. I've never actually done market replay on NinjaTrader 8, but that should be enough resources to get you where you need to be, Carl. And then for backing up, it's just a matter of saving. It'll always ask you, do you want to save? Just hit yes, and then you'll be good. If you build a new workspace or something in 7 or 8, let's say that I add a chart. I've got my ES and I decide to add a chart. Then what I can do is I can go File, Workspace, and during the day as well, I can just click Save Workspace, and it'll help me and keep me there. And George T, thank you. There's some good tips. Now a signal. And I like this. Going to watch how it plays out, not your trade anymore. There's a signal, but the rules aren't met anywhere. So not a trade. So Terrence, Paul just gave you your segue. You ready? Market flow volume analysis. This one goes into the room. Terrence, are you with me? Awesome. Ed, same trade, right? When in doubt, don't. I like it. Not the best momentum, and then that double whammy on the 8 range. Good eyes, Ed. Good eyes. All right, Terrence, first and foremost, I want you to write this down backwards on your forehead and look in the mirror. Market flow is a confirmation tool. And I can't stress this enough. Market flow is a confirmation tool. Market flow signals that will initiate entries when the rules are true. So what does that mean? That means that if the rules aren't true, market flow isn't going to get you in a trade. This is the first way that you're going to use it, Terrence, and this is the best way to use it initially. When your trend trade rules are true. This is a great example on a 50-50. Let's say that you have that 50-50 trade, Terrence, and let's say that you're like, man, divergence printed, but I feel like I have advantages. If only there were something that could help me confirm. Well, that's where market flow comes in. It doesn't change the fact that it's a 50-50 trade. It doesn't change the fact that it's medium probability. But arrows generated telling you to get in at the area when the rules are true. Antenna bars generated at the area when the rules are true. Yellow bars that show a reversal when the rules are true. Carl, I think I'm understanding the question. So if I go to my NinjaTrader workspaces, and let's say I want to make sure that I don't lose my ES, I'm going to right click. I have to show more options. I'm going to right click on that ES. And I am going to, Is there not a copy? There we go. I'm going to right click on it. I'm going to hit copy. And then I'm going to go to a folder outside of that workspace folder. And I'm just going to right click. I'm going to paste it in. And there's my ES workspace. So if everything gets corrupt and moved around, I have a copy of my ES workspace. So just build a folder that says backups. Cool. Sorry guys, I go scatterbrained sometimes. So Terrence, that's the first way, when the trend trade rules are true. And we can use this. Let's see if we can find one of those 50-50 trades where these guys were looking for it. I'm trying to find one. You guys post a lot of pictures. Carl, just put it back in the workspaces folder. So all you're doing is you're keeping it out of the way if you decide to delete. So I have it, I put it in my classroom folder. This is my workspaces folder. Just drop it right back in. You can drag it over, absolutely. All right, so Terrence, let's do this. If I were going to take this trade from, from this area right here, and I'm saying to myself, I don't have the best momentum, and I have a loss of momentum, I'm looking for a little confirmation from market flow to decide if I want to get into this trade. So what I can say is that if I'm going to get into this trade at this area because my rules are met for a high probability trend trade, or my rules are met for a trend trade, but it's not high probability because I don't have the advantage of momentum, at this area, if I get a market flow signal, I might take the trade. So market flow gave me an antenna bar right here, which technically is a market flow signal. If I'm using market flow to enter a trade at an area inside of favorable large triggers because the rules are met, when market flow gives me the signal to enter, I'm going to put my stop behind it. And remember, it doesn't guarantee a winner. It just says that there was something going on. But you still have to read all the indicators. Multiple divergences, not the best momentum. It's a very low probability trade. So if you take a market flow signal, even though everything else says don't take it, you're still probably going to get run over. And then let's look for an example where it was helpful. It is, isn't it? Holiday trading. So let's see just for grins what market flow looked like at this absolutely beautiful high probability trend trade. Not that you needed any sort of confirmation for a trade that looks like that. But Terrence, look at what market flow gave you right at that best of the best area. It gave you a signal to go long. So if there was a challenge, market flow helps you with that. So that's the first way to use market flow. And I think that the best way, yep, you see the green arrow underneath? That's a market flow confirmation signal when the rules are met. And then the flip side is, let's see, this is where we hit resistance. There's a long signal. Do you see it? Let me circle it. No rules met here, right? Not a trend trade rule. Anything can happen triggers, haven't broken through resistance, divergence, huge window of opportunity. You get a market flow signal, but the rules aren't met. So you have to train yourself when the rules are met and you need that little bit of confirmation. Whether it's a 50-50 trade, whether you're losing momentum and you think that it may be a good trade. And this is the one right over here that Paul took, and I think that George T took. Where are we at with it? 10:45, that's not it. Sorry, market flow, there we go. It's kind of anything can happen triggers, absolutely. There's no divergence, it's a tiny window of opportunity. Hypoxic, take care. Happy holidays. It is very much. So Terrence, look at when you get the pullback here, not the best look, medium probability, that little market flow confirmation. It gets you in a little later, there's a cost for confirmation, but it says, all right, let's take a shot at it. And then when divergence prints, it tells you don't take a shot at it. And that's pretty much market flow in the beginning. So does that make sense? Use it for confirmation in the beginning. Commit to those rules. Here, let's see what's happening right now. $50-50 trade, right? 50-50 trade, divergence prints. Here's my window of opportunity. Let's see if market flow gives confirmation at the area inside of favorable large triggers on a 50-50. You don't have it on your charts? It's a specific chart. It's a third chart, Terrence. And I'm not a sales guy, but I'm pretty sure it's not a free chart. We could probably get you a test run on it if you wanted it. 50-50, divergence prints. Here's that area, right? This would have to be a market flow signal right here. And it's not. It's an up bar. Let's see if it keeps you out of a loser. No worries. I'm glad to talk about it. When I first got market flow, I hadn't written a plan. I didn't understand what I was looking for. It was pretty funny. Not going to lie. There's a warning picture on here. Don't stare at it. And Terrence, it's an amazing tool and it can create advantages because you go from using it as a confirmation tool to recognizing key patterns when the market is at a turning point, whether it's divergence on that area, whether it's seeing stranded sellers or stranded buyers. Just like the other charts, it's one of those things that I think it's an amazing tool. And I told John this morning, actually, I was like, I opened up NinjaTrader 8 and I didn't have a market flow chart built. And I didn't realize how naked I felt as a trader without it because I like to use it for confirmation. When the market is at a potential top or a potential bottom, I like to use it to see what sort of bar patterns it's getting. When I get to an area of resistance that has the potential to hold, identifying things like antenna bars with stranded buyers help me make decisions about how I feel about it. I think it's a great tool. I think it's a tool that everyone should plan on adding at some point. It's not mandatory. You don't need it if you're focusing on a high probability scenario all the time. But I think as you learn to read it, it creates advantages. And in this one, it kept you out of the short, which probably kept you from getting stopped out. Just another tool. Absolutely. I'll talk about anything, guys, especially during the holidays. It broke. Divergence. See, this is an instance where you may want to use market flow, right? The triggers break. You've got odds favorable. You've had losses of momentum all the way down. You have a loss of momentum. The smalls are up against. Divergence prints here. Waiting for that market flow confirmation to get you into the market. That's not the best look. This is the man, I have been as patient as I know how to be in a market that's been consolidating. That's a tough one. I know, but look at this. Pivot, stop out, divergence, 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 divergence. Smalls are butted up against it. Divergence, anything can happen triggers. Gary took the same one. Odds favorable on 8 range, small outside of the large. No. How many no's can you have to take a trade, Gary? Oh, Carl, did you get squared away? Awesome. George T, thank you for helping out. So here's an interesting thought. If I have a checklist, why do I have a checklist? I have a checklist to give me the best of the best, right? To give me an advantage. If I'm willing to have a couple no's in there, what good is the checklist? Right? Like if one of your conditions for getting in is strong triggers on the 8 range, why would you still get in if it's not present? If it's important enough to put on the checklist, shouldn't it be important enough to make sure that it's true? Does that make sense? So checklists are great. Your checklist should be all the things that give you an advantage. Yeah. Gary, I'm not going to lie. I've never even thought about that. Thanks, Carl. You too. George T, saving a workspace like somewhere off to the side in case you delete everything and you like it. Yeah, no worries. We'll do that. You guys gave away a lot of advantages of momentum on this one. It does prove that your checklist works, doesn't it? Gary, every time I take a Yahoo trade outside of the checklist and lose it, it confirms. So there's that pivot stop out on the 50-50 after divergence. I bet you there was a market flow signal. Nope, but it made it right to the high volume area. One way that you can use a checklist. Still not my trade. In this green high volume area is the absolute best spot for that next higher divergence. All right, George T, are you with me? So if I go to my NinjaTrader 7 folder and I go to workspaces, these are my workspaces. I've got a little OCD, so I clean it down to crude, ES, and untitled. That's it. That's all I have. If I want to do a backup, watch this. I can do this. Let's go to my desktop and create a new folder. And I'll call it Backup Workspaces. So if I go to my workspaces and I click on the ES workspace, I can copy it, and then I can go to my desktop to my backup workspaces, and I can paste it right in there. So now I have a copy of that ES workspace that I love so much on my desktop in a folder called Backup Workspaces. So if I go through and I delete my entire workspace folder for some reason, then I've got a clean copy of it someplace else. Does that make sense? And then if you need to get it back, it's the exact same process in reverse. I can copy it here, and then I can delete everything from workspaces, and I can just paste it right back in, and it'll be available for me in NinjaTrader. Awesome. True story, guys. I've never actually had to do that before. Pattern expectations, green HVA line. Didn't I say that's where that second higher divergence is most likely to come from? So Terrence, there's another way that the market flow chart can give you a little awareness of potential spots. It becomes a great tool. It really does. All right. I'm going to show you guys something that tends to be true. This is going under chart reading. That's all it is. We're killing time. We've got 20 minutes. Let's talk about the sharks. Buyers in control all the way to resistance. Sellers fight back all the way to that divergence low. Buyers fight as hard as they can. 50-50 on resistance. That one didn't work. We saw the divergence. And the buyers push it all the way back down to that support. I'm sorry, sellers push it all the way down to the support. 50-50 had divergence. Buyers push back. 50-50 had divergence. Nexgen traders are saying safe in this consolidation. Sellers push back all the way to that key area. Buyers push, can't even get to the key area, right? So now we're starting to think, uh-oh, sellers taking control. Sellers go, ha-ha, we've got you now, buyers. And they push as hard as they can. And they clear that area. When the market has been consolidating this much, it's rare that one side just rolls over. That one barely cleared the area, and the buyers pushed again. This is still a good looking trade on the 13-2, right? Does everyone see how on the 13-2, odds favorable, no termination conditions? Looks good. Your smaller chart showed you losing momentum all the way down, showed those small triggers working their way inside. Showed that those large triggers are making the turn right at the 1-to-1s. Your only area is right at the very top. And then if you were using that market flow chart, market flow gave you divergence. Market flow gave you anything can happen triggers. And now it looks like the fight's back on, right? The buyers give it one more push, straight to resistance, straight to mid bands. My large triggers remain flat and below the area. We'll see what happens. There's no long trades. Still too soon for shorts. It's just chart reading, guys. That's all we do. When there's nothing to do, let's read charts. That's all we can do. What's the ES doing? Got that lower divergence from a pivot stop out, right? Market's pushing down. Just kind of helping us understand the clear path. I can see this Fibonacci support. It's been there for the last hour and a half. The sellers can see that Fibonacci support. The buyers can see that Fibonacci support. Look at what the market does when it hits it. It bounces. They scramble on a smaller, faster chart. That advantage of a clear path keeps you from jumping in the middle of the fight when an area hasn't broken. If it's going to break, it's going to break, guys. A lot of chart reading today. I like it. How are you guys feeling? We got a few minutes left. Everybody ready for Christmas? Does everybody know how to do market replay? I know we just talked a little bit about it. Guys, go to the market replay. Study this. Make sure you're good with it. If you're not, let's talk about it tomorrow. We'll set it up for NinjaTrader 7. We'll end the day. Remember, we're ending early tomorrow, so maybe at 10:45. You got snow. We've got a freeze coming into Austin tomorrow. I don't think we're going to snow, though. Where are you at, Terrence? You don't have to tell me if you don't want to. Minus 35? Great googly moogly. Oh, you're way up there. George T, I'm with you. Minus 35. I'm not going to lie, Terrence. I don't know how you guys live in that. I get cranky. We're at 43 right now, and I'm telling you what, I'm not happy about it. Oh, that is Celsius. What's minus 35 Celsius in Fahrenheit? That's still low. Because if 32 is 0, so you're looking at what? 0 Fahrenheit almost? 40 apart? Yeah, you and me too, George. Man, I'd love to see it. Snow used to be cool. After a couple spine surgeries, around 35 degrees Fahrenheit, negative 35 Fahrenheit. Minus 35 Celsius can't be 35 Fahrenheit. They're different measures. You guys are making me pull out the experts now. Pulling out the Googles. Negative 31. Edwin, I should have never doubted. Isn't that funny though? How is negative 35? Oh, it's math. That's the problem. I don't do math. That's kind of cool. Ed, you get the Smart Guy Award for today. I would have thought that that would have stayed constant, but apparently it's algebra. I failed college algebra 4 times before I finally passed it, so. There we go. That last seller push didn't work. The buyers were waiting for him. Was there something on a larger time frame that could have let us know? Look at that on a larger time frame. It's a 50-50 on a pivot stop out with the large triggers still above. Guys, crude oil has tested your patience today, hasn't it? Look at that. If you were patient, there were a couple opportunities to get paid. Not many, but there were a couple opportunities to get paid. There were plenty of opportunities to give it back. If you broke your rules, if you took less than perfect trades today, if you were trading hope, wide world of sports. Oh, Terrence, that's pretty. See, that's what lures you in. You see a picture like this, and you're like, man, that's beautiful. I could go hang out there. And then you sneeze, and your nose hairs break off from the cold. Ed, 50-50 with divergence. 50-50 with divergence. Remember when we talked about I'm pretty good at recognizing patterns? Ed, you showed me 2 losers today. Both of those losers were 50-50s with divergence, right? Logic dictates that maybe you pull that one out of your plan for a little bit. Totally up to you. That's one of the hardest things as a trader to do, isn't it? To be able to ignore an opportunity, hopium and emotional, absolutely. Especially the better you get at reading your indicators. Guys, even in a range-bound market, here's a 50-50, right? Small's above the large are wide, they're angled in the direction of the trend. I have divergence potential. I could have an order waiting, right? What if divergence is true? Divergence is true. All I have to do is cancel right out. I'm not obligated to take a 50-50 with divergence. The flip side, let's see if it does anything. 50-50 with divergence potential. We can wait for a market flow signal. Terrence, here's a good one. 50-50 trade. My market flow chart has already given me a yellow reversal bar that's also an antenna bar. That's a good sign that at this particular spot, sellers are putting up a fight. Ron. Sounds good. Enjoy your afternoon. Enjoy your Christmassy stuff. And then I will see you tomorrow morning. Guys, we have about 10 minutes. Let's see how this one plays out. It may not even set up, right? Right now, all we know is that it's 50-50 with odds. Terrence, take care. We'll see you tomorrow. There's our first bar. So I identify my window of opportunity. Oh, divergence is true. So some people say, with divergence being true, a market flow signal from the area will get me into a trade. Me personally, with divergence on a 50-50, with 2 reversal bars, not with a 10-foot pull. Ed, strong triggers, everything says down, coming from divergence, no divergence. If you'd gotten in at that best of the best, a lot more money. Nice trade though. Isn't it nice when you have more of a clear path, no divergence? So Ed, 3 trades. You're at 33% winners on 50-50 trades. The one that won had no divergence. And you got in 1.5 late. Nice trade. Good job taking 3 points back, 3.5 points back. That takes a little bit of the sting out of it. Isn't it pretty cool though when you just sort of put that one extra thing in there? 50-50, divergence. I have 2 reversal bars. I do have a high volume area. I have strong triggers, strong triggers, strong triggers. I'm weighing it out. Yeah, Ed, go back and just look at the 50-50s that you lose. And I've talked to people a lot about this. I had one guy, I said, do me a favor. Go back and locate every 50-50 trade. So every time where the large didn't break and the small did, and how many finished the move? That one didn't, this one didn't. So there's 4 that didn't. Let's see which ones do. I'm looking for a reversal bar in a 50-50 scenario. That one didn't make it. That one didn't make it. That's one that probably fit the rules. No worries. There's a 50-50 that didn't make it. It's a 50-50 that didn't make it. Guys, do you see what I'm doing here? There's a 50-50 that didn't make it. That's just today. There's another 50-50 that didn't make it. 50-50 didn't make it. Has anyone ever done this? Where are we at right now? We're at like 12 that lost on 50-50. 50-50, larger pullback. 50-50, didn't finish the move. 50-50, larger pullback. Beautiful termination, beautiful termination. 50-50, didn't make it. 50-50, didn't make it. 50-50, didn't make it. How many of these do you need to see before you start saying to yourself, man, 50-50 trades don't make it a lot of the time? There's a 50-50 that made it. At 10:30, let's see what it looked like. Not a trade rule met. It's not a rules met trade. The one that makes it, you have to go outside of your comfort zone. Guys, while we were doing that, look at this. Market flow gave you a market flow signal from a high volume area with the rules met on a 50-50 with a divergence. It's a medium probability trade. If you manage it assertively, you've probably taken your $100, your break even. And a lot of 50-50s only hit that quick profits, right? 50-50 is not a home run trade. 50-50 is a medium probability trade. The area has the potential to break. If you took quick profits, you're at break even probably right around 98. It either gets you or it doesn't, right? Medium probability. What you're going to do, and this is how I'm going to end the day today. What you're going to do is you're going to start taking so many pictures. And you're going to start posting so many pictures. And you're going to start asking so many questions. And I want you to make it your mission to fill up this spreadsheet with things that you see. Because every time you take a picture and you annotate the chart, you're solidifying what you're looking at, whether it's rules met, whether it's rules not met, whether it's what your best pre-trade looks like, what your greatest management looks like. The more pictures that you take, the better shot you have. So Gary, once again, you omitted that part of your spreadsheet that says 50-50 trade with divergence, wait for market flow signal. So this is the second time, Gary, that you've cut that off of the checklist and taken a trade that doesn't fit the checklist. So there it is, right? So now there has to be honesty in advertising. Because you can't wait for a market, you can't be in on the market flow bar if you're waiting for the market flow signal, right? I understand how the software works. That signal doesn't print until that bar finishes printing. So you broke your rules outside of your checklist because you wanted to be in the trade. I'm not saying it's a bad trade. I'm saying with an HVA line and strong triggers everywhere, it's probably a great shot. But your checklist only works if you follow it. It's a nice trade, Gary. Awesome. Ed, it's nice seeing you in here. Good having you in class, man. Be safe in that freeze. I know Houston's got one coming too. Gary, I'm not beating you up, but just because you don't show me the part of the checklist that you skipped, I know what your checklist looks like. And you can't click yes if it's no. Because this is the behavior, and Gary, this isn't just you because I'm notorious for it. I've done it a million times. So I am not throwing stones. This is the behavior when you're willing to break your rules because you'd rather be in a trade than stay consistent. That's the stuff that'll get you. Because how do you know when to break that rule? If it were me, I might say 50-50 with divergence, with a small window of opportunity that lines up with a high volume area line. I might be willing to take one shot from the area and keep it small risk. Whoa. -4. Yeah, you guys can have that. I'm chasing sunshine these days. I'll be in Sarasota in 7 days. And then I'm driving to Southern California. I like warm. Warm is my thing. Guys, that's it for the day. I hope you learned something. I know I did. I learn every day. Y'all's questions